Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Okay, well, I'm here with Rachel Hirsch from Wellness Growth Ventures. Really looking forward to just spending some time with Rachel and learning more about her background and her career and everything that she's building. I got to know her over the fall, within one of our community, networking platforms that we were doing called the Fund Accelerator, and really got to spend some time with her along with other great fund managers and LPs. So, Rachel, number one, thanks for all of your flexibility, your patience, and for being part of the community. And also thanks for offering up to spend some time with us today and talk a little more about, your story and your background and what you're building.
Thank you. I have to say being a part of your community and all of the educational programming you put on has been incredibly impactful. So very grateful for you and all that you do.
Well, thank you. And can't do it without people like yourself. So it's all about community. But Rachel, hey, you know what? Why don't we dive in? Why don't we talk a little more about kind of your early career? Tell me a little more about, what you studied in your career. A lot of people always say that venture capital, private equity, banking, there's no real traditional career path. And, you can't really go to college and study venture capital, right? So a lot of times there's some pathway or some pivot or some network or some community that helps you get into the industry. So would love to maybe start at your educational journey and, kind of what your interests were and how you navigated through that career path to building what you've built.
Yeah. Well, I have sort of a silly, as a child, I really wanted to be a bond salesman. I don't think I really knew what that was, but I was dead set on it. So I worked my whole life learning about that and trying to make my way to Wall Street. I was never quite a bond salesman. I was in debt capital markets for a bit, but so I made it there and I loved it. I loved the public markets. I've always loved finance. Numbers have always been sort of like my love language. And I went from UBS then to Tiger Global. So I keep saying I started public and then I ended up going like public private. And it was my time then post that I went to business school in London. And that's really when I started to dig into venture. I didn't really know much about it, frankly. I at the time would have considered Tiger more a private equity fund, although I don't even know if that's really accurate. In my mind, that's how I viewed it, at least. And working with these early stage companies when I was in business school, I was obsessed, quite frankly, the impact you can have on these early stage founders and the excitement that exists there. And it's a vastly different energy and community than what I had been grown up with, quite frankly, in terms of public markets. And so, yeah, I can't imagine looking back now.
Well, let's just go back for a second. I have to ask, Rachel, what motivated you to want to be a bond salesman? Was it like, movies that you saw? Was it like the Wall Street movie? I mean, did you see Wall Street? Is that what kind of got you interested in?
Didn't. I think so. I have two uncles that were bond salesmen, and I had cousins then in New York. And I grew up in Chicago, and I was very lucky to have grown up in Chicago. But I think it was almost like a vehicle for me to get there originally. And then when I started to actually learn about it, the markets aren't pure math. It's not it is a little bit of art to it. And that is fascinating to me. It's a constant evolution. It's constant learning. There's always more to learn. There's always more to do. And I was obsessed with that idea. And the fact that it wasn't just straight math. So yeah, I think it just fit me perfectly.
And I think there's a home for everybody in the market, right? You could be great at storytelling. You could be great at IR, right? I mean, you could be good at marketing where you build the decks and put together the collateral. And then, help me out here. What are some other roles? I mean, there's the buy side, there's the sell side, there's wealth management.
Even operations of a fund. When, I look back to some of my experiences, the back office, I say it in air quotes, sometimes that was larger than the investment side of the fund or of the company. And those are such hugely important pieces, whether it's accounting, bookkeeping, even just like office management. There's so many pieces.
Yeah, and I think what's really innovative, obviously, we have an educational platform and a program and a community, but what I think is really interesting is a lot of these hedge funds now have a kind of rotational program where you can go in. Like Point 72 has an amazing program, and I know JP Morgan has an analyst program. So there's a lot of large companies that are trying to almost like pre-seed fund managers, trying to retain
Yeah.
talent in the earlier stage. And then, I think the tough part is retention. So with all that's going on, Jamie Dimon decides to require 5 days of work coming in, so I don't know what your thoughts are in terms of kind of like people that are working at the trading desk. I think some of those roles definitely have to be in person, but there's a lot of stuff that's happening hybrid. But then what's your reaction to companies that are now trying to, Goldman has been doing the same thing too. So a lot of these bigger banks are, trying to get people to come back into the office. So what are your thoughts in terms of like why you think they need to do that? Do you think it's for better productivity or it's better accountability or?
I don't It's really hard to say. I've been so far removed from that
Mhm.
uh, in office, like UBS type corporate structure now for
Yeah,
so long that I
I
don't know
know.
that I have like a valid perspective. Um, I could argue it both ways. I see the value, quite frankly, of giving up that expensive real estate, but I also appreciate that so much learning and collaboration happens in person. So I don't know. I'm sure it's dependent on business unit, on team.
Hmm.
But I think we'll definitely see the fallout in terms of as certain companies, whether it be in tech or in finance, start to go back, what type of talent is then lost or gained?
Yeah, and I'll say too, I mean, there's a few things that I've done recently that I haven't done since COVID. And I have no issue riding the subway. I just haven't had to because I've usually just taken, I live in New York, right? So I live in Midtown. So and I have a 7-year old. So it's
Oh,
really fun to take the bus because the bus has these like huge, massive
yeah.
panoramic windows and it's the same price. And you can like literally
That's
go
just the
all the way
city.
uptown and see the entire city. So I haven't taken the subway in a really, really long time, almost like 5 years. But I was on the west side and somebody was like, "Oh, do I take the 7 train or do I take?" And I was like, "I have no idea. I usually just take an Uber and pay like $30." And then somebody was like, "Oh, the 7 train is right here." And I ended up taking the 7 train. And I think that bus station, like near Hudson Yards, is like
Mhm.
completely brand new. So it's like
Yeah,
beautiful. So I took the subway and it was great. It just hasn't been a long time. It's just been so long since I've taken, the subway since COVID.
right.
So that was kind of something interesting. But anyways, I mean, switching gears. So you worked at Tiger. One thing that I thought was really interesting with Tiger was just kind of their ability to outsource their sourcing and screening. So they'd get like, Bain and love to learn a little more about like the timing of like, what of when you were there and kind of some of your focus areas there, if you're allowed to. But, one thing that I know is, when they were really, really trying to get to a fast velocity in terms of just doing deals. They would hire outside consulting firms to go in and kind of do the diligence, do the ICs, and do so many ICs at scale, which, typically, if you think about even just a traditional, you know, fund two or fund three that's even deploying like a couple 100 million, there's still a more rigid process and there's definitely like kind of a pipeline, right? They've got a deal, they've got a Monday partners meeting, then they take it to IC and they have their own internal processes. So, I don't know what your thoughts are in terms of kind of, trying to do deals at scale and maybe, one or two bullets on like your experience at Tiger and maybe some of the things you learned, if you're allowed to talk about it.
Yeah, I have only incredible things to say. I think they're some of the most brilliant people I've ever encountered.
Hmm.
I think the way in which they, continued to build so I'm incredibly is admirable, and there was so much takeaway for me there.
Hmm.
Um, yeah, I feel lucky to have had any time there. And I'd argue that it really impacted me into building wellness growth ventures
Hmm.
because um, they did have I don't know if outwardly say it was a consumer focus, but there was a bit of a consumer focus whilst I was there, and
Yeah.
um, I was energized by a lot of the projects that I was working on because they were consumer. To me, they felt consumer
Hmm.
focused, and so it's definitely impacted the fact that half of Wellness Growth Ventures portfolio truly is a consumer portfolio. And so I'm very grateful for them for impacting me in this way.
And I think it really helps. I mean, so one thing I'm excited about with this new fund accelerator cohort is I'm starting to see a few spin out managers that have come out from like big franchises. And I would say, I would assume like your experience at Tiger really built some really good discipline and good processes to put in place, opposed to other managers that are just kind of figuring it out as they go. You can go back to kind of the process and the structure and kind of the mentorship that you had from more seasoned veterans in the industry, kind of working for a bigger firm. And I would say that also helped me. Like I worked at a couple firms before I started Sutton, and just kind of their process was really like helpful because I took that back into my own practice as well. So
for sure. Let me be clear. I'm still very much learning so much every day. Like I'm incredibly grateful for all of the learnings that I had whilst at every, prior period of my life.
mhm.
But it's just a constant learning. And that's part of why I love what I do. I will always be learning. Every mistake I'm grateful for, because there's so much learning in every mistake, good, bad. So yeah, I'm definitely still learning.
Yeah. Well, I'm going to ask you a question, but maybe I'll start by answering it. So like maybe a couple big learnings from 2024 for me, and I'd love to hear your opinion, but like one big learning is sometimes when you pay less, you pay more, right? So like if you try to save money on some type of cheaper service provider, you may be paying double in the future.
Yeah.
And then I think I had another one, which will probably come back to me, but any key learnings from 2024?
That's a good one. I like yours. I think I've had a few. I think 2024 was an interesting year where consumer was almost like a dirty word.
Mhm.
And my pushback, I feel such conviction. I mean, it's 2/3 ish of GDP. People are, I appreciate that the economy effects and how people spend is changing, but it's consumers exist. That's what we do every single day. So I still feel this learning of it doesn't, there will be cycles, things will ebb and flow. But if I have conviction and if I have the data, the structure, all of these pieces that we've talked about, then I need to keep investing, because otherwise I'm missing out on these great potential vintages, quite frankly. And I think you hear a lot of the fear from others, and naturally it seeps in and affects you. So sticking to your conviction, I think, was a huge piece that came out of that for me.
Yeah, and I've done a few consumer deals, and there's some that I really like that, and there's some sectors that I just try to stick to because of my background educationally. But tell me a little more about Wellness Growth. So let's hear the origin story, and then let's learn a little more about kind of your focus on consumer and, maybe your filtering criteria for founders that you eventually invest in.
Yeah. So Wellness Growth Ventures came to be about 3.5 years ago now. As I mentioned, during business school, I started working with some family offices, doing cap intro work, some diligence work, and I was obsessed. I ended up taking an opportunity out in California. That's what I was in London. That's what brought me to California.
Mhm.
To Exponential Fitness was previously a part of TPG. They spun out and they were pre-IPO, and I'd been at UBS for transactions, I'd been at Tiger for transactions, but I'd never been in a company for a transaction, and it felt like an incredible opportunity. So
Mhm.
Wellness Growth Ventures was a little bit in ideation phase during that. And then COVID hit, and sort of the IPO transaction was still existing, but blew up a little bit. And so I had a lot of time to spend more back on Wellness Growth Ventures. And I'm incredibly lucky to have had support from brilliant LPs who, some of them are finance backgrounds, some of them are more of like family office background. They're all just brilliant operators, and provided so much expertise and guidance, and had enough faith in me to say, like, you really need to do this. It's enough of these little SPVs or sending this out or telling us to invest. Like, you need to really institutionalize this.
Yeah.
So we created more of a fund zero. And the whole thesis is we invest in better for you CPG, call it food, bev, and beauty. And then the other side of that is women's health. So it's really the categories where women own 85+% of the purchasing power. And so we focus more on female founders because we're focusing on the female consumer.
Sure.
And that mixed with the generational wealth transfer, women, the 9, 10, 11, you'll hear different numbers of how women's wealth currently. And by 2030, so 5 years, women are going to have over 30 trillion in assets. So while we're already owning 85% of the purchasing power, the resilience and the sustainability that we'll have with this wealth growth is fascinating. So that's really, really where we focus at Wellness Growth Ventures.
So looking at and then what are some of the products and maybe some of the companies that that maybe you've done recently that you're excited about?
Yeah. So it's like picking a favorite child, but I just look them up every time because they're all
Yeah.
truly
Well,
like,
maybe instead of playing favorites, maybe you just talk about a recent one. That way that's agnostic of favorite, because I'm sure they're all great.
yeah, I hope they don't mind that I say this, but this is one of my favorite stories to tell because I think it speaks so much to the community of early stage
Mhm.
venture. GoNanas is a company that I had met really early on in my journey of Wellness Growth Ventures, and it wasn't quite right for us at the time, but we kept in touch, and they raised from other people, and it was very. I was supporting them as a consumer. I was checking in on them. They were sending me updates. It was very community building, but it wasn't quite right for us to make an investment, and they knew it wasn't personal, and I knew, it was, everything was copacetic.
Mhm.
Eventually they did hit a point where it was like, it was 100% the right time for us to make an investment, and I couldn't be more thrilled with their skill, what they've done, how they're building, the strategy, the board they've put in place. I'm incredibly proud to be a part of it. So I think it's just a nice story that no is not a forever no, and no is not something to burn a bridge over, because you really never know where it will lead. So check out GoNanas. They're, all your grocery stores. They're also D2C. They're a allergen-free banana bread mix. It's pancakes and cookies. It's all the good things. But for people like me who are not a very good cook or baker, I rely on it heavily.
Yeah. Yeah, it's funny. There was a TikTok that I saw with Kevin Bacon, and you might laugh, but he made like gluten-free pancakes, but
Uh-huh.
the whole batter was banana. So
Yeah,
he just
that's
took.
exactly what it
Oh,
is.
okay, got it. Yeah. So there's no carbs, right? Because
Right.
it's just a banana.
And what's
So it's really
interesting
interesting.
about it is, so bananas are actually often a loss producing center for grocery stores. They go bad so quickly. And so when you place the GoNanas products next to bananas in the grocery store, it helps the velocity of bananas
Oh,
that are
sure.
slightly brown. So it's really incentivized for the grocery, which it's sort of a win for all. There's so much food waste in this world. And if there's a way for us to sort of work together and move things
Mhm.
around, there's actually like a huge impact piece that unintentionally is a byproduct of this.
Yeah, and I remember one of my learnings. So, well, one comment I'll say is I think what they did kind of translates especially to emerging GPs, right? So if somebody passes at the moment, it's really important to nurture and share updates, share stories, because people may still click on the email and find out what you've been up to. So I'm imagining and just assuming that you probably opened up one of their email updates, or maybe there was a continued follow up where maybe the timing worked out. I'm assuming, but I would say
Yes,
kind of like
they
that's the same thing
we
with
we just
GPs, right?
continue to keep in touch, and, like,
Yeah.
that's the beautiful thing, and that's no different, like, just what you're saying with GPs and LPs, for us to,
Hmm.
it's keep in touch, keep updating people, and that's part of what I love about early stage venture. It's this community that we create where it's not a hard line, it's not a hard no, it's no, everyone still wants to help and support each other, and
Hmm.
there's really beautiful things that can come from that.
Yeah. So, and then I remember one of my learnings. So this is a big one for me, at least, but I would say, um, for fund managers or even just people that are in the sales pipeline, you shouldn't be educating when you're doing your pitch. So the education, I feel, starts like much earlier in the marketing, right? So
Yeah,
people should already know what you do, why you're valuable, why you're different, maybe through looking at your socials, maybe just kind of
right.
seeing an event that you did. But then when you think about the sales process, which is like essentially the GP on the meeting, they shouldn't have to spend the entire meeting educating the client, like, because all the education should have already been done. Like,
Right.
that final meeting is really kind of the close, right? To kind
Yeah.
of maybe hit an emotional point and help them understand why, like, your missions are aligned. But like all the education on the product of like the fun terms, or like what you're doing. Hey, you're focusing on wellness. Your brand is Wellness Growth Ventures, and here's what you're doing. I feel like people should have already known that, a long ago. And really, that call to finally talk to you is like, really, hey, you know what's like the minimum check size, or when could we get in? What's timing? It's more like it's, I feel like sales, or like the GPs in the final meeting is really just like logistics, and then kind of like making sure if it makes sense to kind of close. But like,
Yeah.
I don't know if that made sense, but I
Yeah, it
feel like
did.
a lot of times people, when they're trying to close, a lot of the education is happening on that call, when I feel like you can take care of that like much earlier.
Yeah.
So,
I think one of the things I love about the area in which I play in is sometimes we'll find founders who they're just so excited, and so things like
mhm.
that will happen where they want to keep talking about the and it's I value it because I appreciate the excitement, but it's
Yeah.
part of our job then once we invest to help like educate them on how to, their next growth round, they need to be a little sharper, they need to be a little more buttoned
Mhm.
up. How can we help them?
Yeah.
So sometimes I don't ding them that much for I 100% agree with you, but I have a lot of faith in people's learning abilities, and so
Mhm.
often you're betting on the founder and that your belief in their ability to grow and learn, um, which is, again, I feel lucky to get to do what I do.
Yeah, no, absolutely. Well, what are some of the things that you look for in a founder? Maybe, and I know we're running short on time soon, but like maybe tell me a little more about like the soft skills, and maybe some of the KPIs that, maybe the DNA of what makes Wellness Growth Ventures and their portfolio companies. But then what are some basic KPIs in terms of revenue, in terms of, if they're consumer, I'm assuming they're doing a lot of paid ads. So like maybe they're, CAC to LTV ratio. I'm not sure how deep you go, but we'd love to learn, like, hey, what's your screening criteria?
Well, I'll give you two examples on that. So Becca is the founder of Fishwife. If you've never tried it, it's tinned fish. It sounds, when I say tinned fish, everyone's sort of like, what? I take this advice, take this, and I promise you will not regret it. It is like sort of life changing to the meals that I eat, but it's tinned fish. And so when you get this pitch on tinned fish, everyone's sort of like, oh, no, thank you. They pass. But Becca, she is a killer. She is going to be studied. There will be a Harvard business case study on her, and undoubtedly. She is brilliant. She is gritty. She is kind. She is thoughtful. She is creative. She is the type of person that I would bet on her every time, every single time. And you can see it in the way she speaks. Her investor updates are unparalleled. I have never, even my time at Tiger, I never saw an investor update to this depth and intelligence. And while I actually personally loved Tin Fish and I loved her products, she was the one I was betting on, and the team she
Yeah.
built and the way her team spoke about her and the way she spoke about her team, that's what gave me confidence. And Belly Welly is another interesting example because they've made huge pivots. So Katie, again, she's the founder who I was betting on, but she was focused on the IBS market. And you talk to any woman out there, every woman's going to raise their hand saying, I have IBS. And she was, talking about the millennial Gen Z variation of what used to be the outdated like Metamucil. Um,
Hmm.
but she is intentional with her market research. She's super intentional with how much cash she's putting out. Both her and Becca are profitable companies, which is incredibly rare for an early stage founder in the consumer space, but they are so intelligent and specific in how they outflow cash. That kind of thinking, that's what I look for because it's hard. It's nearly impossible, but they've been able to do it. Um, I call us late stage seed. So I expect a couple million top line revenue. With the appreciation, the company is going to have to pivot dozens of times before they really find their footing. And again, that's part of why the human skills and the human is so important in these early stage bets.
Sure. I don't know if you've been looking at like life extension all, but we all look to like Brian Johnson, but something that I thought was pretty interesting that somebody shared with me is it's not really about life extension and just living longer and like, being on life support for just a longer time or just kind of existing. But I think an interesting term that I heard recently was health extension.
Yeah.
So
Living better.
just And I think like I can't even, and this is kind of embarrassing for me to admit, but I can't even think of like the last time that I've done a sprint. Like I ran track in college, and I don't know a lot of people that have like actually gone on the track and done a sprint. You know, I'm lucky if I can get a couple runs in a week, but
Yeah.
that's kind of interesting for people to go out and be able to do, you know, because I know physically I can do a sprint, you know, but I just haven't made the time to do it. And really, and I feel like, you know, stretching and you know, lifting weights and all that is really important, because I know for men especially, once you hit 40s you start to lose a little bit of your muscle mass, so it's important to continue lifting. So I don't
Yeah.
know if you have any thoughts on like
Women as
health
well.
extension, and you know, maybe some, you know, products or companies that are kind of focusing on that and just kind of, you know, improving and just maintaining the muscle strength that we all
Yeah.
should be having.
Not to leave you out, but I'm
Mhm.
hyper focused on menopause space.
Okay.
Every single woman goes through menopause, and I think the NIH estimates by 2030, 50% of the female population will be in menopause.
Hmm.
And what's super interesting about that is there's really not loads of efficacious solutions. But what happens is we lose bone density, we lose muscle mass, and it's a huge problem. And when you start to add on the layer of GLP-1s, that happens even faster. And kids
Hmm.
at the age of 12, it's, you know, or it might even be 6, are approved to take it. And so the long-term ramifications of that muscle mass and bone density are potentially a growing problem for our society. I'm not saying that that outweighs potentially the benefits, but how do we combat that? And we're really focused on that right now at Wellness Growth Ventures on the women's health side.
Hmm.
But from a personal experience, I can say weightlifting is huge. And I think that's only going to grow. And that's, I think, actually going to maybe become more popular than some of the cardio as we learn about the importance of how that affects muscle mass and bone density.
Are there any other sectors that you think are really exciting? And I guess for menopause, are there ways to, what are some of the solutions? Are there solutions that, you know, you take blood samples, or what are some of the ways to handle that?
It's actually quite sad. I don't,
Hmm.
not like on a let's, you know, bring out the violin, but
Yeah.
historically, women's health is really underinvested in. So if you take
Hmm.
out oncology, 2% of research historically had been spent on women's health. So there's really not a lot of data, there's not a lot of
Yeah.
information, and there's not a lot of solutions. So we're really in the infancy stages of
Hmm.
finding these efficacious solutions for a lot of these mass problems, arguably. But what an exciting time then for us all to be investing in it and learning about it. So there's a lot of work to be done, and that's why we're excited to be participating in this growing sector.
Yeah. Yeah. There was one company that I saw about 4 years ago that would take urine samples, and they would provide additional data to your fertility, which obviously is another growing sector. But they could, you know, use, it was a little bit of AI, because they would detect like certain types of colors and like an applicator, and like they could, you know, predict like based on that data along with your blood data, like, you know, your level of fertility, which I know is definitely a thing that people are always talking about as well. So,
Yeah.
yeah. Well, Rachel, you know, I really appreciate your time. I think this is really helpful, and appreciate all that you do for founders. I appreciate you for, you know, supporting our community of other fund managers, and mentoring other emerging fund managers, and looking forward to hopefully catching up with you soon.
Yeah. Thank you so much for having me on. It was good to see you, and I appreciate making this time for me.
Yeah, likewise, Rachel. Take care, and we'll catch up soon.
Yeah. Talk to you soon.
Yeah,
Thanks,
bye.
Joel.
Take care.